Hey everyone, welcome back to our news trading session. And obviously, this is last one for the month of July. Let me know if the audio is coming through okay. And yeah, good morning, good afternoon, good evening, depending on where you are. Okay, audio seems to be good on my side. Let's get this started for tonight. We are going to go through our news trading session number 3. And obviously, this is for our CPI numbers. And the market is awaiting this number. Very important. There's a couple of comments from Besson as well that could actually give us a little bit of an indication into what the numbers could be. All right, my name is Viren. Let's get started with a quick web disclaimer here. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right. So yeah, my name is Viren. If you are new here or have never attended my sessions before, but I would assume that everyone that came in here would have attended my previous sessions because we have been running this every month for the past, I don't know, nearly 2 years now. I think it is 2 years by now. But yeah, in terms of how long I've been trading, full-time trading right now, it will be 23 years. Yeah, that's pretty much it. So yeah, so it is over 20 years. And I've also worked as the former head technical analyst at GFT Markets, which is now Gain Capital. Also ex-head strategist for Invest in Japan, which is used to be, not anymore, listed company in the Tokyo Stock Exchange. And yeah, do I manage funds? I do, but I don't do retail funds or copy trading or whatever. So let me just clear this out a little bit because there are a couple of fake accounts out there, pretending to be me, saying that I do copy trades and whatnot. I don't do copy trades, and I don't manage funds for retail traders as well. I do manage funds for family offices and pretty much more on the institution side rather than anything else. Okay. All right, expertise is obviously in Ishimoku Kinko here. If you want to learn more about that, we had some videos on this channel. We used to do that a lot. So yeah, I think those videos, you can still look into that. If you guys want to learn about what Ichimoku Kinko Hyo is and whatnot. Okay, I've also been invited as a panelist at Invest Fair in Singapore. Obviously, if you guys are from the investing background, then you would know who Roger Montgomery is. And if you guys are following with the whole institutions, then yeah, you would know who Mike is. Okay, all right. Hey, the rest is easy. You guys might see me on TV and whatnot. Okay. There's going to be a code for participants. This is going to be a promo code to W deposit bonus. So make sure to jot it down. If you want to use it, then yeah, save it until you want to deposit to kind of get the maximum benefit out of that. But yeah, feel free to use it whenever you want, and you should already have access to the private Telegram channel. And I believe someone last week was asking about the private Telegram channel. If you registered through Octa's website, then you should be getting that on your email. Otherwise, please contact the customer service here. I don't think they can actually post the link on YouTube chat, I believe. So yeah, feel free to contact customer service and find out what that Telegram is. Okay, so this is the code. It's on from 2025. It is valid until the 31st of December 2025. It is a one-time use code, so yeah. As I said, this is a W deposit bonus. So if you're trying out and just depositing small amounts, then I don't think you should be using the code. But yeah, I mean, if you want to deposit for your account, set up your equity and whatnot, then yeah, maximize the use potential. Use the code when you are depositing into the account. Okay. Good evening. Good afternoon. Glad to be here. Look, I'm always happy to be with you guys here doing our live trading session for the NFP as well as the inflation number. Beston's comments, they're expecting lower inflation. Beston's comments is actually expecting a higher inflation. That's why he said don't worry about the one number. So I think that would actually be a little bit of a hint. So we'll see. CPI buy or sell? What do you want to buy? What do you want to sell? You know, so that's why we do this, right? Don't just come in here and say buy, sell what, buy, sell what. You know, we don't do that. What do you want to buy? What do you want to sell? You know, think about it yourself, right? And if you have a request that you guys want me to look at, then yeah, you tell me. I don't know what you want to trade, right? Okay, as per usual, we're gonna go through some theories first. You know, obviously it's very quick, right? Let's talk about what inflation is first. You know, for those that are new here, don't worry, we're not in a rush. I'm not really in a rush because the expectations for tonight is actually not really that hard in terms of where the market is positioning themselves right now. It is actually not that hard to figure out where the market is actually going to go. So, feeling good for tonight. I think we are probably going to be trading good here, especially if we do get a number that's actually higher than what the market is expected. But yeah, if you guys are wondering what is inflation, right? And it's good for you to know what you are trading. Don't just randomly come in here and say, you know, buy what, sell what. And if you don't even know what inflation is, what's the context and why is it important right now, this is why we're doing this, okay? It's not just theory every single month. You know, there's always a context behind that theory. It will change, right? But if you guys want to know what inflation is, obviously it's very simple. It is the rate at which prices for goods and services rise, okay? And basically, most commonly used inflation index are basically the CPI. So if anyone says, what's the inflation? Then you look at the CPI year on year, and then you tell them, all right, that's inflation. It's not that hard to figure out, but you know, a lot of people just get confused. They're thinking, you know, inflation has several parts in there. Well, there are a couple of indices out there. We look for inflation numbers, right? We could be looking at the CPI, we could be looking at the PPI, we could be looking at the PCE. But if someone asks you what inflation is, all you need to do is refer them to the year-on-year CPI number. That's basically the inflation rate. Very simple. Okay. Okay. So yeah, you know how things get expensive every single year. Let me give you one very good example because Galaxy Fold 7 just got released by Samsung and price went up. It went up, I believe, about $100 in the US. You know, some other regions probably saw about $200 increase there. But I would really attribute that more to, you know, inflation, right? The cost of making those goods obviously gets more expensive every single year. So yeah, I like to use the phone analogy here, that phones are not getting cheaper, they are actually getting more expensive. Even the Chinese phones are actually getting more expensive right now. Okay, so CPI, why is it critical? Because it provides us with a gauge of inflation, obviously. And Forex traders basically monitor the CPI because it can lead to changes in monetary policy conducted by the central bank. This next month, I'll probably just highlight this in bold and underline it. And that's kind of the sole reason why people are actually trading the CPI numbers, right? You know, you can look at it on a fundamental scale. That inflation does play a huge part in everything that constitutes how the economy grows and whatnot. You know, whether or not people are actually going to be suffering out there because things are getting more expensive. Like if you live in Australia, things get really expensive. And your pay doesn't go up accordingly, which is, you know, it is what it is, right? So, what we're looking at this moment is that, you know, we want to know if the CPI is actually high or low. And basically what the market is actually anticipating is whether or not the FOMC can start cutting interest rates. But if the CPI comes in higher, then yeah, they're not able to cut interest rates. Very simple. If you guys don't know what the FOMC's mandate is, they have a dual mandate, which is to monitor how the labor market is, right? It's about people getting their jobs, you know, how much people are earning. And the other thing is to control price stability. When they say price stability, obviously it relates to the inflation number so that inflation doesn't go up and, you know, price for foods doesn't go up really quickly. Okay, that's their role. If you're watching this from Turkey, then obviously you guys know what happened in your country. Would it be called a hyperinflation? Yeah, I would say so. But inflation is actually really high over there, right? And some part of Asia, if you are from Asia during the global financial crisis, sorry, no, the Asian financial crisis, right? They call it the Asian financial crisis, but what I know is that I think the Southeast Asian countries are probably more affected. Like Thailand and Indonesia basically went into hyperinflation. Indonesia in particular, inflation actually hit 90% during the Asian financial crisis. So yeah, if you guys are curious on what it is, and I know this very well because that's basically my thesis. Okay, so CPI, if we take a look at the CPI and the PPI on the right hand side there, CPI measures the cost of living. PPI measures the real growth in output. The CPI is how much you are paying as a consumer because it's called Consumer Price Index. PPI is called Producer's Price Index. It basically tells you how much it costs to produce something. Okay, so if the PPI goes up, obviously the CPI is going to go up. If the CPI goes up, what is the driving force behind that CPI? You know, for all I care right now, the rest of 2025, it'll be because of Trump's tariff. Very simple, right? Because it includes broad range of goods and services purchased by consumer, and it includes international personal consumption items. Get it? So the tariff is going to have a huge impact on inflation. So it's stupid to think that tariff is going to kick in, and Trump and his administration is basically telling everyone, oh, inflation is not going to go up. It's bullshit. It just doesn't make sense, right? If you are going to impose a tariff of 30% from Europe, then obviously goods from Europe are going to go up by that much as well. If you're going to impose a tariff of 100% from China, then everything else that you buy and use in the US is basically going to go up double in price. Well, that's going to push inflation up. It's just logical. It's just common sense. No such thing as tariff in place and inflation goes down. That's just stupid logic. Okay? So I don't know what kind of stuff that goes on in the market. But yeah, I think people are just dumb enough to believe that kind of things. I'm just here to tell you, don't. It just doesn't make sense. Okay? Okay, now the scope for CPI, obviously that excludes changes in interest rates or costs. So, we might be able to balance that out a little bit, but not by much because, tariff is a completely different thing. The whole trade war that's going on right now, obviously that's going to push inflation up in the US in particular, right? Is it going to affect everything else out there? Or if you're in Europe, if you're in Asia? Probably not. Probably not. As I said, it could just backfire to the Americans. All right, let's talk about the PPI numbers. The PPI number doesn't include imports, so this one here might stay low. So don't be surprised if the PPI doesn't actually go up, but the CPI goes up because the PPI doesn't include imports. Now, the cost of producing stuff there, I don't know how they work it out in the US, but obviously components and parts that's not from the US is still going to be included in the PPI cost, right? But it just means like, if you're buying Mercedes in the US and that Mercedes comes from Germany, that car is not going to be part of the PPI. Let me just give you a little bit of an example. Okay? So if Apple is making phones in China and India, then yeah, they make it there. Their cost is going to be there because the producer's index is going to be based on whatever region that is. Okay, so this is the clear difference between the CPI and the PPI. That means if tonight we get a higher CPI, it doesn't mean that tomorrow it's going to be a lower PPI. Get it? Okay, so make sure you're clear on that. Okay, so core inflation is very simple. Core inflation is your CPI, but we take out food and energy sectors. Not all food, fresh foods are going to be taken out. Right? Your canned foods are not going to be taken out. It's still going to be in the core inflation number, right? Energy sectors, obviously, if we take a look at gas prices, oil prices, they're going to be excluded because it's volatile. Simple as that. So if you take out the volatility that causes the headline inflation to go up, then that reflects the underlying inflation. And this is the reason why we can't just look at the CPI number and be done with it, because we need to compare it to this core CPI number as well. Okay, it doesn't work with just one part of it. All right, let's talk about the numbers. We got about 4 or 5 minutes to, sorry, clock's a little bit faster on my desk here. We got a good 11 minutes, so let's take it slow. All right, what is the expected number tonight? I got this on the calendar. It says inflation rate year on year. That's your CPI year on year, okay? Previous numbers at 2.4%. The consensus is for 2.7%. What was the number earlier this week? I believe yesterday when we posted out the outlook. I don't think it was actually 2.7. I believe it was about 2.6%. But yeah, expected consensus for tonight is going to be at 2.7%. And the breakdown on this consensus here, 47% of the survey is at 2.7%. 43% is at 2.6%. So we're likely going to be getting these two numbers here. There are some surveys that says it's likely going to be at 2.8%. So we'll see what happens here. All right, the core CPI numbers, the year-on-year rate, expected to go from 2.8 now to 3%. And it's actually a pretty high percentage in terms of the consensus here. Again, it is 49% and 45%. But yeah, 49% is going to be at 3%, 45% is going to be at 2.9%. So ballpark, we're going to be looking at the core CPI to go up as well. Okay, now the monthly rate, this one here, I think this is kind of expected. 0.1% to 0.3% for both CPI month on month as well as the core CPI month on month. So what to expect here? Is it going to cause a lot of problem in the market? Is it going to cause a lot of volatility in the market? It will only cause a huge volatility with a high probability of getting it right if the number comes in higher than the consensus, okay? What does that mean? If the CPI comes in at 2.8, 2.9%, then the US dollar is going to strengthen immediately, right? If we take a look at the core inflation number, if it goes up to 3.1%, 3.2%, then yes, the US dollar is also going to skyrocket up. And right now, every major currencies out there is actually in a tight range. At the beginning of this session, before I started, the euro and the sterling, for example, is actually in a range where we can actually use the straddle strategy on those. Okay. Now, what if the number comes in lower? Well, if the number needs to come in lower, the ideal scenario would be if it comes in lower than last month's number, okay? So if the CPI is at 2.4% last month, and for the last month was basically looking at the month of May, the one that's released tonight, we're looking at the month of June. If inflation rate goes down from 2.4% to 2.3%, and the core inflation drops down from 2.8 to, let's say, 2.7, 2.6%, then you're actually going to see a very strong rally on the euro as well on the sterling. Now, on the condition of the two scenarios that we talk about, that both of the core CPI and the CPI year on year are aligned. So I don't want to see a CPI goes up, right? But the core CPI drops down. That is something that we actually have to kind of analyze things all over again, okay? So I don't want a number to be exactly as per consensus because I think the market has already been pricing it. And I'll show you the example on that, how obvious that the market is already pricing in for that that increase in CPI. If you take a look at the movement on the euro, it has been in a downward trajectory, right? So market has already been pricing in that inflation number could actually go up. And that's why you're looking at that the dollar strengthening here. right? On the expected anticipation that the CPI is going to be higher than last month's number. So this has already been priced in, and if we get that number on the at the consensus, exactly at the consensus, that is what we would call not the best case scenario. The best case scenario is inflation overshoots or inflation drops down significantly. Now, I would choose one scenario. That would be for the inflation to overshoot. The reason why I don't really prioritize the inflation dropping down, because market is anticipating a rate cut from the FOMC. But if it overshoots really highly, then it will actually be aligned with the labor market. And remember earlier in the session, I talked to you about the FOMC's dual mandate, which is to maintain the labor market and also the price stability. Labor market has been healthy. We had a gain on the NFP. We had a surprise to the upside on the NFP. We actually saw a drop on the unemployment rate. So labor market is safe. It's good, right? And if the inflation goes beyond the consensus tonight, that is basically the final nail in the coffin to confirm that the FOMC is not going to be able to do anything. They're not able to start cutting interest rates. And that's probably why Besson is out there earlier saying that, hey, it's just one number, it doesn't matter. I don't know. Yeah, of course it matters, right? And it's just going to go up. It's just going to continue to go up if tariff gets, if the tariff collection on the August 1st takes place, then yeah, it's going to go higher beyond August. So does the market believe that Trump is going to place at 30%? Does the market believe that August 1st is going to be the deadline for that? Everyone else in the market right now is basically ignoring whatever Trump is saying, because why? Trump tacos, right? Trump always chicken out. So market is basically looking at this and say, Trump's not going to put a 30% tariff on Europe. He's going to cut it back because he can't afford to. He's acting all high and mighty, but no one's going to be able to do that. Okay? So that's pretty much it. Very simple. So this is already priced in. So in terms of what we're anticipating, I would actually anticipate more of a range breakout. And if you take a look at the euro, this one here has been pretty stable. I believe it has been pretty stable since last Thursday, right? If you take a look at the range here. So can we do something about this? Of course we can, right? We're just going to do a buy stop here. Very simple. I might adjust it a little bit. 1.1705 would be a good number. It's too high. Obviously, it's too high. I might actually have to find a smaller range, but I'm not able to do that because earlier price was actually at 1.1691. So that's the current established range. I can't go any higher and I can't go any lower than that. And for a sell stop, we can't really go any lower than 1.1650 anyway. So those are going to be a sell stop and a buy stop. It's about 50 pips of a gap there. But it will be one directional. If we don't have a conflicting data, it will be one directional. So the Euro USD, we've got a buy stop at 1.1705. And we got a sell stop at 1.1650. Very simple. Now the sterling is also in a good place. At least we have a floor that's actually pretty obvious. So we want to have our sell stop here. It's just likely below 1.3425. I think that's about right. And for a buy stop, I think we can go a little bit closer to the current market pricing here, but it's still going to be about 50 pips off range. 1.3465, I think that's a good place for the sterling for a buy. Sell stop at 1.3418, anywhere below 1.3420, that should be fine. The dollar yen, we're not able to do this. The dollar yen is a completely different thing. We already talked about this on the outlook. This is more of a swing trade going on. The Aussie here is right now, I would just ignore it. I wouldn't be bothered by the Aussie here. The dollar Canadian, I think for once, I think we can actually trade the dollar Canadian. I think we actually have a pretty good range here, right? So we got about 2 minutes left. Don't worry about it. So about 1.3665, I think that would be a good place. Just far enough so we don't get chopped around. You want it to be a little bit safer, then obviously put it below this wick here. That would be at 1.3650. We might do that. It's just 10 pips. So yeah, just in case. So sell at 1.3650 and buy. Yeah, I would place it at 1.3730, about there. All right, so we got 3 trades going on there. Dollar Swiss, whether or not we can actually do this. Dollar Swiss, we can do that as well. So yeah, sell stop 79.50 and the buy stop is going to be at. I would go a little bit higher. I'll go with 70. I would actually go with 80. Yeah, about 80. So 80 on dollar Swiss for the buy stop. Sell stop is going to be at 79.50. So all these trades are about 50 pips off range there between the buy stop and the sell stop. So I don't think we're going to get whipsawed. So I'm not too concerned. Gold, we'll skip gold for now. Yeah, if the number comes in mixed, we'll probably cancel out, whatever positions, because that would actually cause a lot of problem. I don't even bother with candles movement anymore at this point in time. We're trading the news. We just need to be really quick here. All right, news coming out. Core inflation month is actually low. Reported at 2.7% as per consensus. Core inflation at 2.9%. I think everything is pretty much at per consensus. And market's not moving. I don't think market is moving. So yeah, everything as per consensus, unfortunately. And I doubt we're actually going to see a lot of action here. So we'll keep it. We'll keep the positions here. But by right now, if the market wants to react to it, we would have triggered positions. We haven't. Probably the closest one is sterling. 2.7%. The core inflation month on month was actually lower, 0.2%. No previous month's revision as well. So yeah. Should we step out? It's a minute. So as I said, this is probably the worst case scenario. If the market comes in as per consensus, everything has already been priced in by the market. So we got sterling being triggered here. So I'm actually gonna close out on the buy stop here, and I just want to monitor if I should actually be holding on to this here. But I think we should, because it's already been priced in and the market coming through as per consensus. Not really looking at a lot of reactions in the market. Nothing. The spread doesn't even get wider. It doesn't get really wide either. I mean, sterling on 2 pips during news release. That's nothing. Euro USD, we're actually going to step out from Euro USD. This is nowhere near a buy stop and a sell stop. I'm actually going to get out. And then we'll actually look at everything and reanalyze this. Dollar Canadian, I'm also going to cancel the buy stop and the sell stop. The dollar Swiss, yeah, we'll cancel that one out as well. All right. Sterling has been triggered, but it's really more of a tail end getting triggered. I think we should start putting our stop loss here on the sterling here. And stop loss is going to be at 1.3435. I think that would be a fair number. That's fine. That's about 30 pips away. Target price, I think we'll go with a 1-to-1. I do want to target a return to 1.305, 1.35 actually, 1.35 on the sterling here. But yeah, we'll see what happens. It's not moving. Nothing is moving. I thought I was feeling good. I thought Besson dropped a hint that it was going to be higher. It was higher, but it's nothing beyond the consensus. So it is exactly as per consensus. Trump is not touching Mr. Tulane. He's not able to touch that. I know he was creating some bullshit about the Fed spending money on fixing the headquarters and whatnot. Yeah. Expected. I'm not looking at anything. The Dows also, we're not going to be looking at anything. Again, my view on Dow, it's pretty solid. We're not exceeding the high in last year and earlier this year from January, February, early February. We're not exceeding that number. You know, we're looking at about 45,000, I believe. 45,000, 45,250, not exceeding that, not able to do anything. That's on the daily. Nasdaq was grinding higher, but you know that's completely fine. I think I would talk about it's earnings seasons right now, by the way, and you know I believe J.P. Morgan's just got their earnings number, and it was higher because everyone was trading. That's pretty much it. Yeah, I don't think there's actually going to be a new chairman. I don't think it's actually going to do anything. Yeah, I'm just looking at this. There's nothing. There's no. There's no price action here. Dow is actually flat. Nasdaq might be climbing up a little bit, not really pushing any higher. Euro USD might be gaining, but it's not in a range where I would say, yeah, let's go nuts with it. So yeah, we got one trade on the sterling. That's all right. You want to get out? It's just 4 pips away. So not really a problem there at all. Yeah, Nasdaq is grinding because of Nvidia, but Dow it can't carry solo. Exactly that. So again, my view hasn't changed. I'm not really going to be changing my view on those, but yeah. All right, let's take a look at the sterling here. Let's take a look at it on intraday movement here. So if you guys were, did we do one on Thursday? I believe. It was actually a trade on Thursday. Was it on Thursday that we actually did that trade last week? Or was it during the Indonesian session? I'm not sure, but yeah, you should be out with a good 100 pips on the sterling. You know, extended it, it would actually be about 200 pips down. All right, let's take a look at the positioning on this one here. Sterling, I would actually be a little bit more on the careful side. The stochastic is actually about to potentially create a hidden bullish. Sorry, a hidden bearish divergence, at least on the early time frame. Price is just barely staying above the pivot level. 50 minutes, the RSI is ticking up, and let's see the stochastics here. I think we might actually push once, but if price is not able to hit and break 1.35, then cut off your position. Simple as that. Because the hourly might actually be turning. This could actually push up a little bit, probably towards R1, 1.3478. 1.3480, 1.35 is pretty much max. I don't think this is actually going to go to R2. Structurally, this should actually stay intact. We should be looking at price not creating a higher high from this area here. So yeah, price should not be able to reach R2. It might shoot a little bit to 1.35, but that would be the limit. So our target level is going to be at 1.35 for now. That's completely fine. We're looking at it on a 15 minutes perspective. But if you are going to be doing this as a position trade on the sterling, looking at the numbers with the consensus, with everything already been pricing in, then yeah, you know, I think market is probably going to make a decision whether or not the FOMC is going to be cutting in July. My view, FOMC is not going to be cutting in July, so probably the earliest one is going to be in September. From the FOMC. Okay. All right. Now let's take a look at anything else that we can look at. I actually don't have a lot going on here. Nothing to fade. Nothing. I actually don't have. I got nothing. Right, we can't go long gold either. Price for gold is still stuck between 3,350. It's just in a mid range there. Sterling getting pushed down a little bit lower. We might actually start protecting our position. We would actually be looking at this low here. 1.3430. Where was our stop loss on this one? Stop loss 1.3435. Yeah, about right. Our stop loss is completely fine. do not adjust this, that is pretty much it. You know, I'm willing to risk 30 pips. I'll take 30 pips, but any drop below 30 pips, nothing. I'm not going to be doing anything. The euro, not really going anywhere either. You know, initial spike up, but now it's just flat. I wouldn't even consider this anything significant. We are about 8 minutes in, price goes up, price went down right before the news got released. It's flat, right? If we take a look at the movement here, then obviously it's flat. So we just saw the worst case scenario for us as a trader, because a number that's exactly as per consensus is not going to generate that volatility that we're looking out for. You know, that's why I said I want an overshoot or I want an undershoot on the inflation numbers. But as it is, yeah, I'll skip. Yeah, I'll skip the euro, I'll skip the sterling. Let's take a look at what other opportunities, any other currencies that you guys are looking at that you guys want me to take a look at. Yeah, it seems like the dollar yen is moving up. Again, the dollar yen, it's not really an intraday trade. I don't think this is actually fair if I say this is an intraday trade, because we actually don't have a good risk reward ratio. All right, I think we just got stopped out on the sterling. That's completely fine. Not really too big of a fuss there on the sterling. So yeah, it's coming down, and we'll see. I actually might want to catch this if it does break below. I actually do want to have a sell stop if it actually does break below 1.3425. That means I'm going to place it at 1.3415, 20. Yeah, 1.3415. About there. I'm actually just gonna place it there. Right. That means on the euro. Can the euro go down a little bit lower? Let me just double check on. Let me just check on the daily first. See if we actually have room to go. Yeah, I think euro can go a little bit lower. It's been flat though since yesterday. So how far can it go? 1.16. I think it's doable on the euro. On the sterling, yeah. Look. I'm happy to take that break below 1.3434. Oh, that was a 1.34. But yeah, I mean, if it does break 1.34, then it could actually go down a little bit lower, closer to 1.33. So I think this is an okay trade. On the euro, I think there is room for this one as well, but the RSI is just not coming down. I'm actually really worried about the euro. I'll skip the euro, but I'll have that sell stop on the sterling. Definitely not going to be looking at our limit orders here right now with the current condition. All right, what's the go with the dollar yen? Can we do anything with the dollar yen? Probably not. I don't really like trading dollar yen right now. We are kind of at that 148 level ish. We're not really too far away. I mean, if it does break 149, then yeah, I would go for that 151. But right now, getting stuck at about 148 to 149, I'm still a little bit concerned on the dollar yen. All right. You guys have any other requests? You guys want to take a look at equities or whatnot, but coming out from the currency side of things, we actually don't have a lot of price movement. Definitely not shorting the euro. Range wise and the spike just now, I don't think it's actually worth it. The sterling, yeah, I'm okay with the sterling, because I'm really looking at more of this creating a hidden bearish divergence, and the RSI could actually dip down below 40, and then everything could just drop down really quickly. If we take a look at the euro here, the RSI is not coming down. It's actually pretty flat. And the stochastic is not really indicating that there's actually a strong hidden bearish divergence. You look at the difference on the previous high on the euro compared to on the sterling. This is much more obvious. So I'm pro shorting sterling. Not so much on the euro. Okay, you know, I would go for that sterling short. And if you're planning to go for that sterling short, obviously you need to go with the hourly time frame. Just make sure your stop loss is going to be at about resistance one on the for today. And you know, your target level, feel free to go 1.34, 1.3370 if you're going short now. But I prefer a break below this, so I want to go short at about 1.3415, and I want to target a lot lower, you know, 1.3350, 1.3325. That is a much better target level, and your stop loss is going to be there about 1.346575 ish, the high for today, right, this hour right now. This is actually you know, a trade that I would position, and you know, I would do it with a sell stop instead of going into the market right now. Why? Because I need the candle to close in the next 15 minutes, you know, like so. Then yeah, I would probably make that entry in 15 minutes time, but right now we're not able to do that because this is a view that we look at it from the on the hourly time frame. Russia and Ukraine starting again. I think Trump is going a bit. Well, I don't know. I think he's losing it. You know, giving up Patriot missiles and you know, start attacking Putin. I don't know. I think that's just really dumb. I don't know what he's trying to start. Maybe he's got some oil positions that he needs oil prices to go up. I don't know. You know, this is Trump. He won't do it if it's not for business, or maybe he really wants to get nominated for a Nobel Prize for peace. I don't know, right? He'll do anything. We're currently not expecting a hidden bullish on daily on the sterling. It's not confirmed. The stochastics and the RSI is still very far away, right? Price could actually drop down to 1.33, and we might get a much better hidden bullish divergence on the daily. But you know, I'm looking at it on the intraday scale. Then yeah, on the hourly time frame, then I'm actually looking at a hidden bearish divergence. Because if you look at the trend on the short term, it is actually in a downtrend, right? So don't confuse the two, okay? All right, especially you, Albert. You know what you should be doing and what you should not be doing. If you are doing a swing trade, then your view is going to be on the swing trade. Don't mix it up with the hourly trade, right? We're trying to maximize whatever we can get. I think there is about 100 pips drop on the sterling, so why not go for it if it does break 1.34? Then I'll start buying it back up at maybe 1.32, 1.33. You know, obviously those two numbers are a much better number than market bouncing off at 1.34, because the deeper the correction is, you know, the bigger the gains that I could have, I would say. But yeah, this is the current movement here on the hourly, and if you add this onto the daily, it means price needs to break outside of this channel and then continue up, right? So if you're looking at it from a daily perspective, this could go down here before bouncing back up, okay? And if I switch it to the hourly time frame, then it would make a lot of sense. It would actually hit our target level, bounce off 1.33, and then price goes up. But, you know, don't mix it up. Are we not expecting a hidden bullish divergence? Of course I'm expecting a hidden bullish divergence, but if you talk to me about this now, which you can talk to me about it on the IC, then it's actually going to confuse everyone here that's going to be watching this and say, hey, we're trading this intraday. And then you're looking for a hidden bearish and a hidden bullish on the same thing. Of course, it's going to confuse a lot of people here. So, all right, with this CPI number, can we expect a dollar index to go up to close the gap at around 98.30 and also 61.8% retracement on the daily or on the hourly? Because you know, dollar index, we'll look at it on the daily, so I would assume so. Is there a gap? 98.30. You're talking about this gap? That's actually a pretty small gap. You know, I'm not really too concerned. Yeah. Do we expect a higher CPI dollar index? I'm expecting a drop in the euro and the sterling for the correction to be complete. It's not even complete. It's probably only halfway through. So yes, I do expect the dollar index to go up as well. Okay, so yeah, I do. I mean, that's just logical, right? If you look at it, the numbers, even though it is as per consensus, we still see inflation goes up. Now, I'm not too fussed about the inflation number that we had so far, right? As long as the tariff is not in place, I have zero concern on the real inflation that the economy is actually going to suffer from. So, if Trump says August 1st is when the deadline is, and he says he's not going to move it, I don't know if he's going to move it. He might cancel the whole thing away and just say, oh, nominate me for Nobel Prize, I'll take away the tariff. I don't know, maybe he'll say that. But yeah, if tariff kicks in on the 1st of August, we need the whole month of August to figure out whether or not we're actually going to see that tariff impact on inflation. So we actually have to wait until the month of September to trade August CPI numbers. That's when it matters most, okay? And that's why with the FOMC, with the CPI like this, then everyone's just going to write off that in July, there's no rate cut from the FOMC. That would say the rate cut would happen in September because, that's when they meet next. And obviously, we'll get the first month in the month of August. So this whole delaying from Trump is not helping with the situation. Is actually going to prolong the confusion in the market. So maybe that's what he intended. Some people don't like it. I don't like it. All right. Position traders don't like it. We don't have a clear clue on the impact of all this tariff, and with the number of tariffs keep changing every single week, we just can't pinpoint what's really going on anymore. So up until now, the tariff that got in place is 10%, right? This is June's number. I think for June, tariff at 10%. Has that been in place? I think that was in place. No, 10% tariff is not in place yet. I don't think that was actually in place. Tariff for steel is in place, 25%. Tariff for automotive are in place, 25%. But I think the base 10% tariff, I don't think that's actually in place yet. I'm not sure. I need to check, but from my knowledge, I don't think that was actually in place yet. Because it should kick in at the same time with the reciprocal tariff. Yeah, I do hope August is the final month, or, something happens to Trump. Simple as that, right? Because I think he's just causing a lot of uncertainty to the market. Some traders like it. They like the volatility. Feel free, right? But I would actually prefer to stay clear from long-term positioning. It is a little bit risky because things can just flip like that depending on what stupid things Trump said. Simple as that. Yeah, Trump's intention is that we keep thinking about him. Exactly. That's all he cares about. That's all he cares about. He'll do evil things. He'll do bad things. He'll say stupid things, so that everyone laughs at him, and then he's happy. Why? Because then his ratings goes up, as in everyone is paying attention to me. We know Trump, and and for one simple thing, right? If you learn, or you read his book, you watch his movies, whatever, I would actually highly recommend you guys watch The Apprentice. Then you get an insight into how his mind works. But yeah, his 3 rules are just basically deny, deny, deny. Simple as that. The usual that we need to think about the Fed only. Now we need to think about 2 people. I'm not too focused on the Fed, because if Fed is really independent, then they should be independent. There's not a lot of interference from Trump. So I'm actually really focusing a lot more on Trump at this point in time. All right, look, I'm sorry guys. This is actually the worst case scenario. We already talked about this. This is the worst. Why? We're not getting a lot of movement. We got literally zero movement. This is the hourly. The hourly on the dollar yen is a doji, right? Hourly on the sterling here, pretty much back to where it started. The euro is also flat. We're not breaking out of range. The Aussie is also not going anywhere. Dollar Swiss is also not going anywhere. Dollar Canadian pushing a little bit lower, not really going anywhere. Dollar yen, we got a doji, I just told you. US 30 also flat, just hanging on there on the Ichimoku cloud in the early time frame. Nasdaq tried to push up, but that's pretty much it. Kind of running out of fuel at this point in time. VIX also flat. S&P 500 also flat. Across the board, we have zero volatility going on in the market at this point in time. Fiscal policy is supposed to supplement the monetary policy, right? But if one is going this way, the other one is going that way, obviously that's a mess. But obviously we can't comment on that. Okay, guys, look. We really have nothing to trade. So, I would keep that sell stop if you want to. But if we don't have that catalyst going on right now, and we have been waiting for about half an hour, we're just not looking at anything going on in the market. All right, we got about 5 minutes left. If you guys have any requests or anything like that you want to ask me, feel free. But unfortunately, we got zero trade. There was a buy stop that was triggered on the sterling there. We got 30 pips on the loss there today. And that's pretty much it. Everything else was flat. We got non-reaction in the market. Pretty much zero volatility at this point in time. All right, so this is the Codes Non-Farm 2025. XAUUSD. All right, let's take a look at gold. Don't really want to bring it up because it's not going to go anywhere. Trust me on this, right? That's the one thing you don't really want to trade. So this is gold on the hourly time frame. We are going nowhere for gold on the hourly time frame. This is the established range that we have. Basically, price needs to break out of this range. Otherwise, we are not going to go anywhere for gold. Simple. Very simple things. Okay. We got Ichimoku cloud as a support. So if you want to go short on gold, you have to wait. You have to wait for price to break below this box if you want to. Then you can go short. Problem is where you're going to be targeting, because we got one low here, one low there. You're probably going to be looking at about 1.33 max, right? That's going to give you about 1-to-1 risk reward ratio. Would you risk 35 bucks to gain 35 on gold? Nah, I'll skip. This is just plain stupid. And the reason being is there's no catalyst for gold. We already talked about this on the Outlook. If you are not watching the weekly Outlook, please just watch it every Monday. It doesn't take you more than 20 minutes, right? We are now pivoting at about, this week's pivot is at 3,330. We're still going to be looking at 3,350, and if price stays here, we just don't have a trend on gold. It's just all this choppiness here. So at your own risk if you want to, but this is one thing I wouldn't even touch right now. I mean, if there's a catalyst, right? If Trump sends that Patriot to Ukraine, right, and the comedian hit the button and Moscow was attacked, then yeah, by all means, please buy a lot of gold if you want to, and buy oil at it as well. Until that happens, I don't think nothing is actually going to happen with this one here, because this is not linked to tariffs at this point in time in terms of a safe haven risk. This is also not linked to the FOMC's interest rate decision as well. Okay? So we just don't have that catalyst right now for gold. Okay. You want to short it, feel free, but from what I can see, at least on the hourly time frame, you're not going to be looking at anything. If you really want to short it on the 1 minute time frame, then yeah, I would probably go short. but then this would actually be a small trade. You know, if you see a drop to about 3.345, 3.340 max, then get out. You know, maybe $1, $2, get out if you want to, but your stop loss is going to be at 3.355. Is it worth it? Because if I were to go short right now, right, and placing my stop loss at the nearest high on the 1 minute time frame, which is stupid, we should be placing it at that spike there. That's going to be at 3.360. You're risking $11. What are you targeting? If you target 3.340, your risk reward ratio is not even 1-to-1. So that's the reason why I don't even want to discuss this. Yeah, the only true event is the NFE numbers, and that's pretty much it. Because this one here, market has already been pricing it for days on end, so we already saw that happen. All right, guys. No, I mean, if we don't have anything, then let's wrap it up. All right, thanks, guys. And I'll see you guys again next week. Sorry, not next week, next month. And I believe August 1st is going to be our NFE numbers. Let me just double check the dates. What are the dates for next month CPI? Yeah, August 1st is the NFE numbers. CPI is going to be on the 12th of August. In between, probably on week 2, we're going to have our theory sessions. Okay? All right, guys, have a fantastic week ahead. Good luck with your trades. This is only Tuesday, so, you know, a lot of stuff is likely going to happen. Please pay closer attention to what Trump is doing with Russia at this point in time, because, you know, his stupidity could trigger another run to safe havens. So, yeah, just keep that in mind, okay? Good luck, guys. I'll see you.